At 60 years old, my friend finally figured out why he's still worried about money. And the answer was painfully simple. My friend just turned 60. And when we talk about money, I notice something most people wouldn't. It's not fear. It's not panic. It's not even frustration. It's clarity. The kind that only comes when someone understands exactly where their life took a different turn than they expected. If he had done one thing differently 30 years ago, he wouldn't be worrying about money today. He wouldn't be calculating expenses. He wouldn't be delaying retirement. He wouldn't be quietly stressed about the future. He would have around $3.7 million right now. And what makes this story uncomfortable is not that he failed. It's that he did almost everything right. He wasn't lazy. He wasn't reckless. He wasn't irresponsible. He actually earned quite well. For most of his adult life, he worked as a freelancer. Steady work, consistent income, money coming in month after month. Enough to live comfortably and still have something left over. From the outside, his life looked stable. But one belief quietly shaped everything that came after. And unless you recognize it, it can shape your future too. Let me tell you about him. We'll call him John. Back in the 1990s, John was doing fine. Not wealthy, but comfortable. He had valuable skills and clients who relied on him. That gave him confidence. He believed that as long as he stayed active and worked hard, financial freedom would eventually follow. But John didn't want to wait decades. He didn't want to hear that wealth takes time. He wanted progress he could feel. He wanted security. He wanted certainty. He wanted to know that one day money would stop being a concern. So when he first learned about investing, he jumped in with enthusiasm. At the beginning, it felt like control. He'd buy a stock, watch it go up a few percent, and feel smart. He'd check his account multiple times a day. He felt involved. He felt proactive. Then the price would dip. And suddenly, that confidence turned into anxiety. He'd sell, telling himself he was being disciplined. Then he'd hear about another opportunity, another stock, another trend, another can't-miss idea. He was constantly moving his money, sometimes multiple times a day. In his mind, activity meant intelligence. Effort meant responsibility. But in reality, something else was happening. Fees were piling up quietly. Taxes were eating away at gains he never noticed. And emotions were making decisions logic never would. Still, John didn't think the problem was his approach. He thought the problem was that he hadn't found the right opportunity yet. So he tried something bigger. Entrepreneurship. He told himself that if he could just build a successful business, the market wouldn't matter. He wouldn't need to worry about ups and downs. He'd be in control. So he started a real estate listing website. On paper, it made sense. People always need housing. Homes are bought and sold every day. If he could build a platform where people searched for properties, surely there would be opportunity. But reality was harsher. Developers were expensive. Communication was slow. Deadlines were constantly missed. Features that were supposed to take weeks took months. Bugs appeared after updates. Fixing one problem created another. Every conversation felt draining. And John didn't walk away. That's the important part. He didn't quit after a few months. He didn't give up when things got hard. He stayed. He invested more money, more time, more belief. Years passed. But the market was already dominated. Big companies had massive budgets, entire teams, years of brand recognition, millions in funding. John was competing with personal savings. Eventually, the numbers stopped making sense. The site never gained traction. And when he finally shut it down, tens of thousands of dollars were gone, along with years of effort he could never get back. Most people would have stopped there. John didn't, because stopping would mean accepting something he wasn't ready to accept. So he tried again. This time, he heard that selling digital products was the way forward. Courses, books, meal plans, health guides, passive income. He chose the healthy eating niche. He created content, built a website, invested in design, ran ads on Facebook and Google. People clicked. Traffic came in. But nobody bought. The space was crowded. Established brands dominated search results. Influencers had spent years building trust with their audiences. They had social proof, authority, reach. John had good intentions but no leverage. Month after month, advertising costs drained his account. And once again he stayed longer than most people would. And once again it didn't work. Fast forward to today. John is 60. He can't retire comfortably. He still worries about money. And supporting his children the way he imagined is no longer realistic. Not because he didn't earn, but because he never let time work on his side. A few months ago we were talking about all of this, and he said something I haven't forgotten. He said, If I had access to the kind of information people have now, I would have done everything differently. Then he paused. Because here's the part that hurts. If John had taken just $1,000 a month from his freelance income and invested it into a simple S&P 500 index fund, and then left it alone for 35 years, he'd have around $3.7 million today. No stock picking, no trading, no failed businesses, just consistency and time. That realization changed the way I think about money. Because John didn't miss a secret opportunity. He missed patience. This is where most people misunderstand investing. They think success comes from intelligence, or timing, or finding the perfect strategy. But the real advantage comes from doing less. Warren Buffett didn't build his wealth by constantly chasing new ideas. He built it by buying good investments and holding them for decades. Time did the heavy lifting. And John never allowed himself to benefit from that. If you're watching this and thinking, I don't want to end up there, here's what actually matters. You don't need a lot of money. You don't need to be an expert. You don't need to predict the market. Even $100 a month is enough to change your future. Because it's not about the amount. It's about the habit. Choose something simple. A broad market ETF that owns hundreds of companies. Automate your contributions. Remove emotion from the process. And when the market drops, remember this. That's not a disaster. That's a discount. Most people panic at the worst possible moment. Smart investors stay consistent. If you do that long enough, you don't need luck. You don't need perfect timing. You don't need to be smarter than anyone else. You just need patience. I created a free guide called the Ultimate Investing Guide for people who want to start the right way. It walks you through choosing your first ETF, opening your account safely, and making your first investment step by step. You can download it for free using the link in the description or by visiting griffinwise.com. It's everything I wish John had when he was starting out. Because the biggest cost in investing isn't a market crash. It's waiting too long to begin. 10 years from now, you'll either be relieved you started, or wishing you had. You don't have to be the person who says, I wish I started earlier. You can be the person who says, I'm glad I finally did. And if you want to see exactly how to start investing with your first $100, click the video on your screen now. That small decision might quietly change the rest of your life.